Hey there, everybody. Welcome back to Trader Engineering Crypto Edition. Today, we're going to talk about Bitcoin, a little bit of market cycle theory, and where I think Bitcoin is going to peak. If you like the content, please like, subscribe, follow. Head over to traderengineering.com for the sale on the Trader Engineering course. Let's get right into this. So, I did just do a 60-second breakdown video on where I think Bitcoin is going to peak and when it's going to peak. Now, always take these things with a grain of salt, right? I mean, data points from prior price action do not necessarily indicate that it will repeat that in the future, right? Crypto today in 2025 is different from crypto in 2020 and in 2015, right? So you have to take those things into consideration. But you also can't make up narratives to support your hopes and dreams. So, data. Data is what should drive your analysis, and data is what drives mine. So, let's look at what happened in prior cycles. And in the 60-second breakdown, I basically measured from the bear market bottom to the bull market top in each of the last two cycles, and then including the current one. I also measured from the halving point to the top. And what it comes down to is, if you look at the bear market bottom in January of 2015, right, that was, and let me qualify, this is the first touchdown to that low, which was about $165 Bitcoin. And boy, doesn't that sound like a nice price to buy. But we did have a double bottom, right? We had the second attempt right at lifetime support, hit the same exact marker. I'm measuring from the first point of that low, right? The first touchdown of the low. You can measure from either one, but I think it makes more sense to go from that low to get some kind of reliable data set. Because, right, I mean, some would say, okay, well, we didn't get a double bottom in the last cycle. Wrong. This was our touchdown. This was our double bottom, right? You don't always have to get a double bottom, but they tend to happen frequently. Because to get a double bottom, right, you have to have your final capitulation here, right, of the bears. You have to have bulls think this is the one, and then you have to have the fearful bulls still hanging out, looking for an exit price, right? We're not too far behind that bull market high, and then we get a sell-off. When that gets bought back again, it's signal and then confirmation, okay? I go over this a lot in the course, right? You can hypothesize and create an analysis without price action, which is the highest risk type of analysis, in my humble opinion. When you see candlesticks print, what you actually have is consensus from the institutions, right? Whatever fundamentals drive this price action is an amalgamation, it's a consensus of institutional liquidity, of institutional capital flow. Okay, if something happens, let's say it's for hypothetical reasons, and this isn't a real hypothetical, this is to demonstrate a point. If there's a single headline that drives the market in a direction, you can hypothesize based on what the headline is how the institutions and retail traders and investors would respond. Or you can wait to see how they respond. And my frame of mind is you don't know exactly what the institutions are going to do when the headline drops. You don't know what they're going to do when all of the headlines calculated to their preferred move is going to be. You don't know what kind of risk they have in a current position. Like if they had longed here and some kind of bullish thing happened there, maybe they're thinking, you know what, we're already in the profits, we're already getting towards a zone, the lifetime resistance, and we don't want to assume that the price is going to go beyond it. We're actually going to sell here to protect our investment because our shareholders are, you get the idea, right? You don't know what's going behind those doors. Now, what I'm getting at though is when I'm looking at this, I have to look at how the market behaved previously. I can't draw up a narrative about how I think the market ought to behave. And there's a very distinct difference there. So when I look at this 36-month data point, I think that's a pretty strong data point. There's not a lot of ambiguity here, right? That's pretty straightforward. Now, a key difference this time, though, because everybody talks about how this time feels different, which frankly I think is mostly a meme than anything else. I think people are just parroting and repeating that talking point, and they're saying it feels different because they're not really bullish or hopeful as they usually are, because they're in the middle of a pullback. But they are right to a degree, because the last time around, Bitcoin wasn't tied or in lockstep with the S&P 500. It wasn't in lockstep with the dollar index or ETFs, right? That wasn't a thing in like 2019, 2020. Definitely not to the degree it is now. Now it's like the last year or two, it's been like almost identical between Bitcoin and the stock market and the dollar, which is even more bizarre based on the history of this, right? It's bizarre in that sense, not bizarre in some fundamental senses, but we're not getting into that today. So when I look at this, I say, and I see a 4-year cycle repeating itself. Okay. We're just simply in a 4-year cycle right now. We're in the bull market now. We have a little more runway left before we potentially validate or invalidate this 36-month thesis. Measuring from that halving point, right? It comes out to a year and a half from the halving is the peak. 36 months from the bear market low is the peak. And when I say the peak, I mean the final touch point of the bull market, right? And here we only had the one, right? We had two, really. You had two wicks side by side. Okay, there's your double top. This one's a little more pronounced. I'm saying by the second peak, right? I'm saying if right now we finally capitulated and bounced off of this support, and sometime in May or June we hit 120 to 140,000, there's peak one, a pullback to the 100,000 range, testing prior resistance as support. Peak number two, somewhere in the fall, and then we drop, right? That would be my hypothesis. I actually posted this on TradingView not too long ago, in the last couple of months or so. So that's one way to measure this, right? And that's frankly how I would look at it from a technical standpoint. Now, fundamentally, you could make some arguments about, quantitative tightening, quantitative easing, right? The kind of the broader monetary policy, influence on the markets. Now, if you go back to May of 2020, and especially, which is when the halving happened, by the way. So May of 2020 was the halving, but what happened 2 months prior to that halving? All right, so COVID. And then we had a $700 billion injection of liquidity into the market. That is huge, huge money supply increase. And by the way, they also got rid of the caps on it, right? Temporarily, just to keep the market stimulated. So now you've got everybody going home. You've got a massive amount of liquidity pumped into the market, into the economy. You've got the halving that happens that May. I mean, you've just got and you just got off of a bear market, right? And you had your double bottom in that COVID capitulation. It's the perfect storm to get a massive run like this, to the tune of about 1,600% on Bitcoin. So I don't think we're going to see that again. At least I hope we don't. In terms of the reasons we had that quantitative easing policy, but we are slowing down QT. Right, the U.S. Fed is slowing down QT. Right, we went from 60 billion to 40 billion. Right, 5 billion in Treasury, 35 in mortgage-backed securities, and that's a 33% reduction. That's pretty good. We're not there yet. We're not at quantitative easing stage yet. But let's see what the summer brings. Right, what happens this summer? What happens this fall? Right, that puts us somewhere in this ballpark. Does QT end? Does QE begin? There's a lot that can happen over the course of a year, and maybe, just maybe, that coincides with the final peak of Bitcoin. That's possible too, right? That's more the fundamental side. Now, the other thing I've pondered, and I have posted about this in the past on TradingView, is are we going to start getting a break of the 4-year cycle? And everybody's talked about this, right? And everybody likes to think every cycle, we're going to stop the 4-year cycle and we're going to go into a super cycle. Again, no data for it, okay? You can hypothesize based on fundamentals. You can say Bitcoin moon 500,000 this cycle, right? You could say we're going to go all the way up here and completely break this lifetime support and resistance. I'm sorry, but not until we see it broken. I'm not saying it won't happen eventually. I actually think it will. Is it going to happen this cycle? That remains to be seen. Now, there are cases to be made for that, of course. Again, like I said, now that it's more tied to stocks, what does that mean for it? Does that mean the 4-year cycle's done? It could be, right? I'm going to be watching very closely at this lifetime resistance. If we break and hit 200,000, right? Let's say we go up here and we break 200 to 250,000 this cycle, this year or even early next year, and we readjust where our lifetime support and resistance is. Let's say we broaden it. And then let's say, of course, let's actually change the hypothetical a bit. Let's say we get up here, we fall down right here, and then break back up, or anything in between, right? Let's say we just hit those points. Doesn't matter how you hit them. and you have to readjust your lifetime support and resistance, like so. What does that do for our analysis, right? And this is the proper thing to do when your current analysis is invalidated, right? You want to readjust for market conditions. That would indicate that the prior hits on support and resistance were valid, but that we actually fell short on 2021. We could have gone higher based on that analysis. What are the implications for the future of Bitcoin if we do widen this, right? Again, if we hit that mark, that $1,000 mark somewhere in this cycle, and we broaden it, well, that means that the next cycle, right? If we're still sticking to the 4-year period, and we say, okay, the bear market low from the peak is about, we'll say 12 to 18 months. So let's put it somewhere in like this time frame. We'll say $50,000 to $60,000 Bitcoin, the bear market low, and then we travel up like this, not in a straight line, of course, into 2029 and 2030, putting us somewhere up here. Well, that puts us at about a $500,000 Bitcoin, which wouldn't surprise me. My estimates were somewhere around 350, right in this ballpark. But that wouldn't surprise me. So the bottom line is, right, we have to adjust our analysis as the price action shows us that it's not respecting our prior analysis. That's just how that works. Now, do I think we are going to see $200,000 Bitcoin in the next 3 months? No. I just don't see the data for it. Do I think we could see 140? Yeah. Yeah, absolutely. I think we could easily do something like that. But it's also worth noting that we haven't had a strong bleed into the altcoins yet. And I brought this up in the last video because if we go back to 2021 and 2020, in January of 21 is when Bitcoin dominance dropped like a stone. It peaked at about 70, let's see here. It peaked at about 73.5%, and the final low was at 38.8. Now that's a big drop. I wouldn't suspect this time around we get that again, not with all the institutional buy-in of Bitcoin. But if we are to assume that we're somewhere in the same stage as the last cycle, right? Let's say from here in January of 21, from the top of that candle to the peak was about 57, we'll just say 60%, to round it. If we took that same measurement from the top of this candle and we went up 60%, boy, that puts us right at 140,000, puts us right at the lifetime resistance area. There's a measurement. What if we tried something a little different? What if we went into the weekly for a hot second and we looked at this breakout point here, right? This 45,000 breakout point was big. Now you can do what's called a measured move, right? You can take a measurement of this move here to the peak, and then you can come up to the pullback here and see if that same move lines up with resistance. Now, breakouts somewhere around the tune of 60% of the time will form a measured move. And what that means is the same distance move, the same percentage move prior to the breakout happens after the breakout. There's different psychological reasons for this, but just walk with me for a second and take the measurement. On its own, it's not enough, right? I would never just, without any other context, say, oh, look, it went this far and it's going to go that far again. No. But when I see data points converge, here at about $140,000 Bitcoin at lifetime resistance with a measured move, okay, with the same distance, the same exhaustion from the prior cycle, that 50 to 60% from January to the peak, it looks like the same thing. And when that happened is when dominance fell. And if dominance didn't have the same kind of raging fall that it had last time, right? Not a 30%, but even a 20 would be a lot. It really only has to come down to the 30 EMA here, which is about a 10 or 15% drop. If that happened, right, that would explain the final 50% move here, right? It would say, okay, dominance is ready. Okay, we're getting exhausted on the Bitcoin front. We're already up 550%. We're going to get up here to the tune of probably somewhere around 700-800%. Yep, about 730. And now, because we've hit this peak, because the data points have converged, that's where people, institutions start to take risk off the table. And that sets us into what we would call the next bear market, right? Where you've got more sellers than buyers for a, elongated period of time, usually 6 months or more. If that were to happen at that time, what does that mean for alts? Well, Ethereum, you know where I stand on this if you've watched any of my content or watched me post on it. I think Ethereum needs that move. And it's funny to see Ethereum have such pessimism. I mean, it's understandable, but it's not, because most of the time when assets pull back like this, the fear is hot. And people, when they talk online, when they talk to each other, are going to speak in terms of that fear. They're going to emote the fear because that's what they're feeling, right? If we replay the tape to the previous cycle, right, before the March madness that was the next bull run, if you were here in 2020 looking at this, right, let's just add one more candle or too many candles. Let's add one more candle for good measure, right? And you're looking at this. I had someone actually say to me, yeah, ETH's current move is sideways and down, or down and sideways, whatever it is. I think it was down and sideways. Down and sideways. And I poked a little fun, and it's like, right, I bet you a lot of people, and I know because I heard it, but I bet you a lot of people felt the same way just before this happened. Right? Just before Ethereum went from $80 to just under $5,000. A near 5,600% move. Now, again, let me be very clear. I don't think we're getting that again, right? That is crazy QE times. That's crazy lower market cap times. That's crazy different time. What I think will happen, though, because I don't think Bitcoin dominance can go up forever without a pullback, I think even if we got a fraction, say, again, a 15% drop instead of a 40% drop or a 30% drop, I think if Ethereum, being the second largest market cap asset in crypto, I think it's a big piece of that pie. I think it gets a big piece of that pie, not just for those technical reasons, but also this has got the best risk reward. This is the part that so many people get wrong. And it's honestly a bit frustrating to have to explain this. Everyone's like, no, look at Bitcoin. Bitcoin's going up. So long it or buy it. Now, let me be very clear. If you're holding it, I'm not talking to you. If you're holding it and you're just DCAing, dollar cost averaging, I'm not talking to you. I'm talking to people who are looking for targets, buy targets, sell targets, whether you're, going long term, trying to accumulate more Bitcoin, for the long haul, or if you're doing it in a futures trade. I'm talking to you. This is a buy area, okay? Up here at 100,000 is not a buy area. You don't buy a new all-time high. You wait for a pullback. People get caught with their pants down when they start to get eager and they buy tops and then they're stuck. And this is how double tops form, by the way. People who longed up here are stuck and they're waiting for the market to come back up so they can sell it again. Doesn't mean it has to sell off and not break. I mean, you could have more buy pressure and we could push through, but that's why you get those areas, right? You get them because of poor position choices, poor entry choices. You also get it because even people who long down here, the smart bulls, are saying, I'm going to take some chips off the table here just in case this is the double top, right? 50% of my pile's off the table. I move my stop loss up here, right? Now I'm in the profits even on the other 50% of my trade. And if it goes higher, sweet, I'll take another 25% here. And if it forms a double top and falls, I'll just take the rest of my profits here and I'm out. Profited the whole way, barely any time in the red. That's how you should be looking at this, right? But Bitcoin has already gone up 550%, right? So if you're looking at this on the broader picture, if I'm somebody who longed way down here, let's say I longed this candle, or I longed this candle, or I even longed this candle, all right? I'm looking at this like, yeah, I'm there. I've got profits to take home, and I'm taking some home, and that's why you get this. On top of a new U.S. administration and, tariff on, tariff off, a lot of uncertainty in the markets. Of course, that drives it too. But what I'm saying is, strictly from a risk perspective, this is an area to take profits if you are a smart early bull. Even if you're a smart late bull, this is a good place to take profits. If you're an overeager bull that made a mistake, yeah, you're waiting to get back out again. Now, if I'm one of these people who's saying, well, why aren't you just going into Bitcoin? Bitcoin's obviously looking upward. And look at Ethereum, right? Ethereum just goes down. Exactly. What's the potential of Bitcoin? We already went over this. The potential of Bitcoin ultimately is probably somewhere around 50 to 70%. Could go higher, but right, if I'm being conservative, if I were to long here to take profits at the peak, I'm not going anywhere above this marker, right? I'm looking at somewhere around $130,000 Bitcoin, and I'm taking chips off the table. And I might leave some on to see where the rest goes and let it ride, but I'm not looking much further than that. What about Ethereum? Okay, let's replay the tape when it comes to Bitcoin dominance. If Bitcoin dominance has that 15% drop, what's the potential of Ethereum at this stage of the market, right? If Bitcoin's going to get 50 or 60%, like it did in 2020, 2021, and Ethereum got a 5 or 600% ride the same time, let's cut that down even by a third. Let's say, okay, Ethereum got 600 last time, it gets 200 this time. Where does that get us? That puts us at about, well, 3 times where we are from this candle. And I'll say right about here under the EMA at about 200% is about a $7,000 Ethereum. Okay, I think that's a fairly modest and conservative view of where Ethereum goes this cycle. I don't think there's any reason to believe Ethereum's going to slump forever. And if I'm looking at a 200% rise over a 50, this is the better risk reward. We are lower in our price band. If this area that we've been playing in since the last bull run, right? We literally are going sideways here, okay? We're oscillating to the side. This is a pullback, okay? Pullbacks don't just do this, right? Pullbacks can also do this. Just a little tight consolidation to the side and back up. When I'm looking at this chart, I see up, consolidation, next leg up. Ethereum's not going down. This is a pullback, ladies and gentlemen. This is insane. For people who talk about Ethereum, being a bad option or a bad investment or a bad trade, or and it's just copium and hopium, playing into your bias, you're nuts. Okay, now I'm saying some people certainly are inhaling immense amounts of hopium on this, and that's their analysis. That's not mine. What I'm seeing here again is we need to get to this buy zone. These strong buy candles here are what sent it to 4,000 the last time. And I think we need to touch it again to finally shake out the bears. Just like in Bitcoin, I think we got to come down to about 72,000 to finally shake them out. And then I think the overeager bulls get in, fearful. Maybe we get a slightly higher low. And then we at least, this is the real conservative view, we at least go back to previous all-time highs, just shy of $4,900. That's where I would take some profits. I would absolutely take some profits off the table. And if we break the all-time highs, right, chances are when we get here, we're going to do a little sell-off, probably back down into the threes, and then maybe we break north, if that were going to happen. The first break attempt usually doesn't happen. It can, but I am not going to bet my money on it literally. I think that's our outlook, assuming nothing else dramatic changes. I think those who think Ethereum isn't a good buy are absolutely insane. I think this is actually the better asset to buy now than Bitcoin, if you're looking to play the cycles. If you're looking for good buy prices, it's still a better buy. You want to buy Ethereum up here, or do you want to buy Ethereum down here where you may never see those prices again? It's pretty simple. Unless your theory is that Ethereum's never going to recover, which I don't know where you're getting that idea. I think these last 4 monthly candles are just playing your psychology. I think your fear is getting the best of you, and I think most people that speak in a pessimistic way about it don't know how to handle, I mean, look at the grand context here, ladies and gentlemen. These little candles right here have everyone in a panic. Just saying. Context. Lot of green here. So, anyway, that's where I think the market's going. That's what I think we can expect. I think Bitcoin at least has another 50 or 60% move on the conservative end. I think it does need one final shakeout, right, if we go into the weekly. I think this candle right here is indicative of that fear, right? First sell-off, second sell-off, kind of an overeager bull situation, but the bears are just taking some profits on their shorts. Too much fear, it'll capitulate, boom. We'll find ourselves retesting that 2024 resistance that we spent all year on, and then we can come back up, right? Once that sentiment switches. And that may coincide with monetary policy. It may not. Who knows what can happen between now and then? And I think ETH just simply follows. I think we get that final capitulation, 2018 cycle high. We get similar buy candles like we had back here. Boom, over eager bulls, a little bit of sell off, and then that dominance, Bitcoin dominance, has the delta of about 15%, maybe 20 at the best, and then we ride. Those are my thoughts. Let me know your thoughts. Again, like, follow, subscribe if you like the content. Head over to traderengineering.com for the sale on the Trader Engineering course. Thanks again for watching. We'll see you next time.